Hello and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin from DecisionPoint.com, and I am here with my father, Carl Swenlin. We are here. We're going to show you what's going on in the market. We will tell you what our indicators told us last Friday to expect this week, and we will take your simple requests, and we'd love to get those questions. We do have a few items from last week that we will probably repeat, just because we did not hit the record button last week. So with that, I think we'll go ahead and get started. Do remember that we are not registered investment advisors, so all trading decisions are your own. Anything you hear in this trading room or read in our blogs should not be considered a call to action. We often talk about mechanical buy and sell signals. So a buy signal, a buy point, these are all technical representations of what's happening with the indicators. So it's not necessarily a call to go buy it right away because we have a PMO buy signal. It doesn't work that way. You got to look at the chart.
They're information signals, not action signals.
Exactly. So we just want to make sure we get that through. I did have a question via email about that, trying to distinguish, I know you don't do calls to action, but you were saying it's a buy and I don't know what to do. So I just want to explain that right off the bat. All right. I think we should get it started. Dad, what's going on in the market?
Okay, going right to it then. Okay, where are we? This is, okay, here's the SPY, and notice if there's Friday's call to action there. I mean, we topped out on, that was Wednesday last week, and I'm sorry, that was Tuesday, and then Friday, we definitely broke down. I was foolishly concerned that it wasn't going to come through, but yeah, it's breaking down big time. And I'm going to take a look at some the big tech stocks a little later, because that's kind of where it resides. The entire market is going whatever way that they go. And they are not looking good right now. Let's go to some of our indicators, which really set my attitude and about the market. Here are the short-term indicators, primarily the STO-B for breadth and STO-V for volume. That's Swenlin Trading Oscillator, and the STO-B topped out last week, as did the STO-V, and we would expect a breakdown within some days of that happening. And actually, that really did mark the top. So there was no lead time, like here we had some lead time on those tops. You can see. The PMO is topped, and it's in typically +2 to -2, or maybe +2.5 to -2.5 is the normal range for this. It can go outside that, but normally that's where we are. So it topped out at the top of its normal range. Everything is truly lining up. Let's look at the intermediate term indicators. The ITBM and VM, breadth momentum and volume momentum, and again they topped last week, and very overbought territory. So you've got your short term and your medium term indicators, intermediate term indicators topping at the same time. That's really a perfect storm signal. Okay, what do I want to go to next? Oh, yes, let's go to, I didn't move something out of the way here. Let's look at our big tech stocks. Okay, here's Apple, down 1.5 right now. You can see there's a major gap down, and of course, Friday was a big failure on Apple. And if we go through here quickly, I'm not going to do in-depth analysis, but here's Adobe, also topping out last week. Amazon, it was showing some great resilience here about the beginning of this month, right? But you got a gap up right now. I think we're getting ready to see a gap. You know, what do you call that? A gap down, making this an island reversal.
Yes.
So again, we have an overbought PMO. It is topped out, getting ready to cross the. It's already crossed the signal line, actually. So Apple and Amazon, biggies, and they're both looking terrible. Google, another biggie, looking terrible.
Drop below, yeah, losing the EMAs.
Right. Yep. Meta, this is one of those that's who wonders what you wonder what's going to happen with it. It's not doing great and hasn't been for quite some time, down 60% at the lows, and it's kind of in a trading range here, but probably going to take out these lows. Notice that the PMO range has been, the top of it has been at the zero line. That's, of course, that's very negative. Microsoft gapping down. Netflix, again, one of those that's really in the failure category, down 77% at the lows here. We think it's going to be taking out those lows eventually. NVIDIA, a nice double top here. Here's where the neckline, or we should say the confirmation line, will be right at that low, and most likely going to take that out. Tesla, not really a big tech stock, a big ugly monster of a stock. And here's another double top. And yeah, here's a typical failure formation when you get a very last gas top on the PMO, and now it's crossed down through the signal line. Not looking good. Let's go to the I got things in my way here, so okay, let's look at the dollar index. It's rallying here. Let's take a look at the longer term chart. Okay, it's definitely in an uptrend, and it's rallying. It looks like it's going to be new highs pretty quick, or a double top. But as long as the dollar is rallying like that, gold is not going to do well. And here we are with the gold. I can't do I can do a weekly chart on that. It's not going to be pretty. But so here's major support right in through here. And as a holder of some gold positions, I'm hoping that support will hold.
Yes.
Whether it does or not, I'm committed. I think that's the last chance for this market is gold. Okay, USO. Came off a top. Now it's moved into a trading range. It's making less progress towards the top of that trading range. So it is potential to break down from this support here. Treasury bonds. So has rallied off of this low, and then it's breaking down from this rising trend, and possibly going to retest these lows down here. 10-year treasuries rallying, and that's not good for the tech stocks. Bitcoin broke down big time last week, and what we have here is definitely a reverse flag, bearish formation, and it's probably going to go down and test these lows. That would be a wide projection from that.
I agree.
Okay. Did you want me to go into the difference between?
Yeah, so we had some subjects that we talked about last week, and because we didn't get the recording, we figured we would talk about them in a little bit more formal way. And one of those was the simple moving averages versus the exponential moving averages. We only use exponential moving averages. There are a few different reasons for that. I'll tell you just the mathematical discussion about the difference between those EMAs, and that is that EMAs tend to put more emphasis on near-term data rather than the earlier data in the data set. So you really get an emphasis on what's happening now versus an emphasis on what's been happening over that whole time, because a regular moving average, of course, is subject to each and every data point, no matter where it's at. So I'll let you go into that next.
Okay, well, this has these are simple moving averages here, and this is for SPY, and I have to reorient myself on this chart. Okay, this is the 200-day moving average. No,
Actually the green is, yeah.
Yeah, here's the 200, here's the 50, and here's the 20.
No.
No.
The green one, I think, is the 200. It's the flattest one.
Okay.
Yeah.
Yes, I should have had this set up before the show. Anyway, so in an exponential moving average always moves toward price, and the simple moving average has a mind of its own, because all the days in the average are equally weighted. So when the 200-day drops off, 200 days ago drops off, it can change the direction of the current moving average. And let's see, we've got, I'm trying to see if I can show a good example. I can't, of how that's worked, but let's look at, we've seen the, I need to get, okay, here's the exponential moving averages. And where is the 200 on this?
Oh, it's support.
Okay. Oh, there it is. Yeah. No, that's the 50.
No, you could see that 200 kind of rolls in there and is flat right up against that support line.
Let me see if I can find it with the thumbnail. No, I can't. So there's the 20, the 50. Okay, I see it now. It's right in that. It's by the support. Okay.
An eye test.
Okay. You know what? I'm going to try one time to look at this. So here's how many days we got? 5 months on that. And notice how they're moving. I'm going to have to come up with a better demonstration of this.
We could just see that for next week.
Yeah, my apologies. But the thing about it, the way you calculate an exponential moving average is you take the current moving average and slice for a 200-day moving. You slice 1/200th off that. You subtract 1/200th of that value, and you add 1/200th of today's price. So it's always weighted in terms of what happened today.
So that's, kind of the main reason we use them. Certainly nothing wrong with using simple moving averages. I think it's really a matter of, what you feel most comfortable with. And certainly, using it for your analysis process, I don't know that that you would want to maybe switch over if your process really is based on those simple moving averages. But we find the EMAs to be a better representation for us anyway.
Well, because it's more affected by today's prices rather than something that happened 20, 50, or 200 days ago. And actually, if I may disagree, the EMAs are vastly superior to simple moving averages.
We did get a belated happy birthday to you, Dad. His birthday was yesterday.
Yep, that's true. Thank you.
So one of the other things we talked about were overbought conditions. And really, I think we're finally seeing what, overbought conditions can lead to. But it was certainly difficult to see all of these overbought readings and then to see price still moving up. And that gave us the feeling that we might be out of a bear market situation simply because we don't, typically in a bull market, that's what you'll see. Overbought conditions can just hang on for a while. The market, will still go up. But in a bear market, typically those overbought conditions lead to almost an immediate decline. So it was a little bit confusing as we were moving forward, but you did an excellent article on overbought conditions. And I thought maybe you could expand on that just a little bit for everyone.
Well, let's see. Basically, what I just showed everyone with the short-term and medium-term averages. Let's see, get down to the short-term. The title of the article was "This is what overbought looks like," and it's truly in-depth overbought. We have the short-term indicators and the medium-term indicators, both in overbought condition, which means all time frames are working against the longs. In a bull market, overbought conditions would not necessarily be a good time to go short, but you can look at it as not a really good time to open long positions. You can go against it, you can go against the tide, but basically it's better to wait until you're in a neutral or oversold condition in a bull market to open new longs.
Perfect. All right. The other two things we talked about were the DP alert and the fact that when we do our DP alert, we do the same charts pretty much every single day. And I'm going to share my screen just so we can get a peek at our last DPA. And you can explain a little bit more about why we do that.
Okay. Well, the idea is to maintain your connection with the market, your orientation with what the market's doing. And even if you're going to take some time off, it doesn't hurt to go, keep in touch and just spend just a few minutes looking at what the charts are doing. So you keep in tune with the market pulse. But so that's why every day we take the same charts and discuss what's going on with them so that we all have a good idea of what the market is doing and you keep a continuum of what's going on. This is the weekly wrap, and you notice we have the tables for the silver cross and golden cross indexes. And
yeah, so basically, if you're, you want to learn about the market and indicators and technical indicators and how they work, your best bet is to look at our DP alert, because by looking at these same charts every day and getting our commentary, you can really see how these indicators move, how they can really tell you the information you need for investing. So DP alert is our cornerstone publication for sure. I also do DP diamonds, and that's basically going to give you, we look at all of the market, and then I go and try and find stocks that really suit the market in that way. So I'm going to kind of go into that same sort of gear, if you will. We're going to look at what's going on in the sectors. So I'm going to pull up my sector list. And then what I like to do is do a view all, and I do it in candle glance. And this is because it does give me pretty much the whole picture all on one page. I know by looking at this, what is really where the strength is, where the strength is not. And honestly, when you take a look at this, Dad, I mean, every single sector is seeing a topping PMO with the exception of consumer staples, energy, and utilities. So for those of you who aren't familiar, I mean, these are certainly XLP and XLU are defensive sectors. So to see them starting to take the lead, if you will, as far as the PMO, that tells you there are problems in the market. And we were already starting to see that. XLU is one of the few sectors that actually made new all-time highs. So, when you start to see that kind of leadership, that's also a clue that things might be a little bit the undercurrent may not be, it might be more of a riptide. So you got to be careful. But you can even see on these two sectors that the PMOs are still looking a little bit suspect here, with the exception of XLE. So I'm going to dive in a little bit into some of these sectors. Let's notice first, though, some of the primary ones that everybody pays attention to, which is technology. You can see that it is pulled back. It is still holding that 200-day EMA, but that PMO is going in for a sell signal. We want to see these levels hold as far as the EMAs go. Consumer discretionary, our other very aggressive sector, has lost the 200-day EMA. The PMO is topped. It also is very near a sell signal. This is where a lot of the leadership is in the market, when we see a really nice move on the S&P 500. And so when we start to see the destruction, if you will, of these aggressive sectors, it's time to beware. XLRE is losing support at the 200-day EMA. Financials lost support at the 200-day EMA. And you can see with XLC, it had just gotten a silver cross. All of these had really were in silver cross positions, but you can see that XLC might actually lose its silver cross and have a dark cross very, very soon. All right, so the sector's not looking very healthy. Let's dive in a little bit to XLE, because that is one of the few that kind of had a bullish setup here. And it was my sector to watch for my DP Diamond subscribers on Friday. This is some sector where we were starting to see some strength, where we had a really nice foundation under the surface. You can see we are down, but only slightly, and still holding above these short-term tops back here. Really, the participation has just been quite good. I mean, we lost a lot of that on that big decline in energy. You can see the stocks above their 20, 50, and 200. That has recuperated. We're now in the top portion there, above 90% for all three of these. Silver Cross moving up beautifully. This tells us how many stocks have their 20 above their 50-day EMA within XLE. The Golden Cross Index has started to recover as well. That tells us how many stocks within energy have a 50-day EMA above the 200-day EMA. You can see also that relative strength was starting to improve here. This sector, honestly, when I look at all of them, does seem to be the healthiest. But let's go ahead and look at XLU, because it did make new all-time highs. It is pulling back to the breakout point, which is textbook pullback. Once you get those breakouts, the question now will be whether we can hold that and either consolidate or bounce off of that level. But you can see it's taking the RSI out of overbought territory. The PMO looks like it is trying to top today, though. 100% of the utility stocks have a 20 above the 50. Almost 90% have the 50 above the 200. And look at this amazing participation over this last month. I mean, it's been at 100% or pretty much in the 80s, 80% range on stocks above their 20, 50, and 200. Stochastics staying above 80. And you can see a really nice improvement here in relative strength. But I we are starting to see this pullback, but until we really get a major breakdown here, I still think utilities look pretty good in the short term.
If this decline persists, everything is going to go down some, and some, of course, some more than others.
Right.
But they're all topping, all 11 sectors. If you remember from the when you saw all the charts.
Yes. Yes. When we looked at that candle glance, for sure. Right. Everything's looking very weak. I mean, I wouldn't say that there's a lot of strength, but if you're going to go and look for some pockets, we could see a little bit more strength here out of these defensive sectors. Certainly, maybe they won't go down as quickly as the others, but at this point, I know I am 60% exposed. Most of those are utilities, to be honest. I've been in utilities for a while, and that's been helpful. I do have renewable energy, which is an area that is pulling back in a big way. And we have support coming up here at $80 for the solar ETF. So my stock is definitely ready to be cut loose, I would say. I need to lock in some of those excellent profits that I had earlier. So my portfolio and my exposure level will be going down today. For those of you who are subscribers to the DP Alert and DP Diamonds, I do let you know every day what my exposure level is. I'm comfortable doing that. Of course, I don't share my whole portfolio. I don't do model portfolios. But I do tell you what my exposure level is. And I know that for some people, that's helpful. All right, I think we've covered the sectors plenty. Let's go back and just look quickly at what's going on in the market. We're still seeing the major indexes all down at this point. NASDAQ certainly suffering the most, with the NASDAQ 100 down 2.12% and the NASDAQ itself down 2.03%. So looking a little dicey out there, I have to say. And, we had a downside, what we call it, a downside initiation climax on Friday. So again, most of our subscribers were given some warning. In fact, I have to say, I did see a comment in here. Good morning. I exited all my positions and I'm 100% cash right now. So Lakshmi, I'm sure you're feeling pretty good today. All right, looks like we do have quite a few symbol requests, and let's go ahead and look at some of those.
There's a question here that, first of all, somebody wanted to know about the FANG long, and I think we covered that, but definitely FANG is definitely not a potential long right now.
All right, let's see. So you covered. There was a question here. Why did your dad say IAU is the last chance for this market, or gold in general? That was a comment. You said that at the end, you're saying, gold doesn't look good, but I'm still in it because it's. So what is your thoughts on that?
I'm just saying that there's the potential for real disaster to happen in the financial markets. Even worse than back in 2008. And I just think that gold is the last, the one chance to keep, your wealth. But that's just an extreme outlook on my part. Let me just say that. But I don't trade I've never had the time for trading. I was too busy building the business, but I don't have any positions right now except gold, and I don't see anything long term coming up.
Yeah, I mean, really, a lot of people are surprised. I will say, I've talked obviously to various subscribers in various trading rooms, and they're always interested. Well, what is Carl trading? And I basically say, he really isn't a trader, and that's just not his thing. You've always been more about the macro of the market and developing indicators, and as you said, building the business. And, you did have a birthday. And I know that when you get to certain ages, I mean, let's face it, guys, I mean, you have to minimize those risks, and trading, particularly now, has a lot of risk associated with it. But I am a trader. I am a short-term trader now. I used to only be intermediate term. And so doing DP diamonds has given me a real sense of how to maneuver and be nimble within the market and watch the sector rotation, watch where the industry groups, there are always pockets of strength. There almost always are stocks that are going up. And so really my job is to ferret out, where are those pockets of strength? And so that's what I do my very best to do for you with DP diamonds. And I expect there are a few subscribers out there who would probably tell you that they're pretty happy in the chat room. So I usually get a few testimonials.
Yes, and I did turn 81 yesterday, and at this point in my life, I have enough. I don't need more. And if we can always use more. We always like to have more, but I don't need to be sticking my neck out to improve my portfolio. I'm really comfortable the way it is.
Well, I have to say it is added stress for sure.
Right.
All right. Carl has just covered this, but TLT. So this is my only comment on TLT. TLT should have been dropping, especially since the Fed announced their plans to sell off their bond holdings. Michael Burry has called them out for barely starting to sell their book, and he is short TLT, while many gurus are very bullish on TLT. For example, Harry Dent. I have found the debate on TLT very confusing. What are your thoughts on this?
My thoughts are just watch the chart. It was rallying for a little while. You want me to? Let me just.
I got it.
Yeah, I got it. Okay. So it hit a bottom in June and rallied for a while. And now it's starting back down. You could look at this as a reverse flag position, a formation. It's not as tight as you would normally see, but yeah, now it's much more like a reverse flag on the weekly. And overall, it's in a downtrend. In short term, it's in a rising trend.
Yes.
Sorry, short term, it's back down again.
Mm-hmm.
So.
Yeah. So ultimately, this is, I think it's a great question, Gordon, but really, and I don't know about you, Dad, but I think you're pretty close to being a technical analysis purist. I know that I am, for better or worse. I try to avoid all of the noise, the headlines, all of everybody's chatter about what they think about the market. I mean, Twitter's full of everybody's opinions. To me, everything is on the chart. Everything is baked into the chart, and using our indicators, I have stacked the deck for me. So I think that with technical analysis, really a lot of the confusion can be taken away by putting that proper emphasis, in our opinion, on technical analysis.
Yeah, and if the story, I like to listen to the story. And when the story starts making sense versus the chart, well, the chart's always the final say.
All right, let me see if there was another question in here that would be appropriate for you. I think we're down to pretty much just symbol requests. So,
Yeah, okay, let's start with that and see if we can't get them all today.
well, we'll see. I do talk. Cut me off.
Okay, ICPT.
All right. This is in a biotech. So biotechs are, a pretty volatile area. I think most of you know. One of the issues I have with biotechs is that they're not homogenous. You usually will see the pockets of strength are really mixed in there. You can find big winners when the whole group is doing well, but at the same time, you can get caught with a big loser. So I just always know going in with a biotech, particularly one, this is fairly low priced. You're going to see a lot of that. Let's go ahead, and I'm actually going to start with the bottom part of my chart. So top is RSI. Here's our PMO, on balance volume. And then I like to do stochastics. But the one thing I do that not a lot of people do, thank you, Tom Boley, he gave me the idea. I look at the industry group versus the S&P. Biotechs are in a declining trend, relatively speaking. The SPY is getting ready to move further down. We do not want anything that is even performing as well as the SPY. And certainly we don't want to take a chance on a group where we're seeing underperformance already. Now, maybe that will shift and with rotation, but at this point, I would be very, very careful with biotechs. Now, if you're going to get one, certainly this one has the strength. We look at it versus its industry group. It's a big, great outperformer, which consequently has translated into being a big outperformer against the S&P. But we have to keep in mind that overall, that the group itself is starting to struggle. Now, when I look at this chart, I see overhead resistance being hit and price pulling back. Looks very similar to the S&P right now. I like the fact that we do have the positive RSI, but notice stochastics have now moved below 80. That's usually a signal that you're going to see some more downside. I mean, you can look back here. That's what happened. You can look back here when stochastics moved down. We ended up with some movement downwards. So we have to be careful of that. So at this point, having lost that area, having turned back at overhead resistance, even though the indicators look fairly healthy, this PMO is very overbought. I could see easily a pullback to that 200-day EMA, possibly down here to $16, where we have that top right there. So overall, I'm not really a fan of this one. I think you're taking some chances there. If I owned it, the minute that PMO turned down, I would definitely be heading for the exits. But I think you could even make a case for heading for the exits right now.
Okay, LLY, Lilly.
If we get to a chart that I very much like, I'm going to introduce that 5-minute chart, because that's what the trading room's about, right? We want to learn how to time our entries and exits. And I have to say, this one just came up and I like it just on looking at these indicators. I mean, all of these indicators are doing exactly what I want to see. Let's get into it. The only issue I have, and I'm going to put my inspect tool on, is that it is getting close to overhead resistance, but it does seem to be not following necessarily the trend of the market. And that consequently has led to being an outperformer against the S&P. PMO just gave us a crossover buy signal right on the 0 line, and RSI is in positive territory. Stochastics just hit 80. Overall, as I said at the beginning of the program, I am not expanding my exposure. So I am certainly not going to be, I'm going to tell you where the buy and sell points are, but I'm not going to be buying. So, all right, so let's pull up our 5-minute chart, because this one is very interesting for entry. So the 5-minute chart, we don't look at this until we're ready to enter or exit a stock. This is for timing purposes to get in and out. That's all it is. The daily chart is really where I make my decisions with the backdrop of the weekly chart. And that's how I do it in DecisionPoint Diamonds. When you are on the 5-minute, Your entry, your mechanical entry, is a PMO crossover combined with a positive RSI. When you get those, that's your mechanical conservative buy point. Now, there's gray areas. That's why you're in this trading room. There's always, if you want to get more aggressive and go in on the PMO turning up, if you want to be aggressive because the RSI has spent the day in positive territory, there are all kinds of gray areas that you can pay attention to. I get to charts late because I am on the West Coast and I'm not a morning person. So this is usually when I'm seeing these 5-minute charts. So this is an excellent time for me to explain to you how I use the entries. So the last entry here that's the crossover, and there's where the RSI went positive. Of course, that's right on the open, which will happen very frequently. But that particular candlestick closed at 324.37. So that's kind of our prior buy point to keep in mind. We're exactly there right now, and price is moving higher. So that would be considered a buy point now. But if you've been watching this chart earlier, the crossover and the positive RSI would have come right here on the close from Friday, and that would have given you a pretty nice move here to the upside. Sell points. When do you want to sell? Basically, anytime the PMO turns over. I don't think jumping in on a sell, if I'm getting rid of the stock, I just need a good excuse. And a 5-minute PMO turning over is my excuse, and that will get me out. And typically you can see here's the PMO turning over. That would have gotten me out over here. Here's the PMO turning over. That would have gotten me out in here. So typically it's going to help you out when it's time to sell, but it also might help you out. Maybe I was ready to sell this and I came to this 5-minute. I'm not at a sell point. Price could move higher. So if I have the opportunity to keep an eye on this 5-minute chart, I'm going to keep my holding because things are still looking positive on a 5-minute. And I like to eke out every 10th, 100th of a percent that I can get. So that's that. Now we can move on.
The one thing to remember is your trading is being done within the ocean of the market. And right now, the ocean of the market is going down. And we don't know if that's going to continue for another day or even till the end of this day. But our opinion is that we're in a bear market, and I think we're resuming that bear market. So whatever you're doing, you need to, first and foremost, and that's the whole point of the decision point alert, is to keep in mind what the whole market is doing, because if I would say 80 to 90% of the stocks will do what the market is doing, and at the very best, they may go against the market, but they'll be greatly reduced. It'll be greatly slowed down by what the market is doing. Okay.
Exactly. So we certainly, as I said, we're in the caution side. I'm actually in the process of taking back some of my exposure and locking in some of the profits from this bear market rally. Now, we could be wrong and it just turns right back up, but you know what? You can always buy that stock back too. So,
okay, Gilead.
Let's look at this. Since we're kind of in the pharmaceuticals, that works out, doesn't it?
Uh-huh.
So this is a great example of what I talk about of this or that. Here we have two stocks. Well, they're not actually both one's pharma, so I can't do the this or that. But what I'll often do is look at the relative strength, and I want to find those outperformers. So you can do a this or that within an industry group and just look at that relative strength. And it gives you an idea that maybe you might want to pick the stock that is showing the relative strength against the group versus the one that is struggling. So here we have Gilead pull back to support, but we are now trading below that level of support, which is a problem. It's also, you can see back here, gap support. It's also there. So this is a very strong area of support. It should hold, and it's not holding. PMO is starting to top. RSI does look positive. Stochastics are looking very negative. The group, as I said, with biotechs, very weak. So we do at least have one that's outperforming, but I don't like these cracks in the foundation right here, particularly the loss of this very strong support level. I mean, when you count these lows, the gap, this top, I mean, this should be holding and it's not. So I would be very, very careful with this one.
Okay. LCID.
Lucid. So autos are, we saw some movement to the upside with, the EV companies in particular, but right now autos are starting to see some decline. I don't know if you're looking at this, Lakshmi, on the short side. I would be more apt to be looking at it as a short than as a long. You can see short-term support has been lost. We are now looking at the next area of support, these two lows, that has been lost. So where are we at now? This one, which has one touch on this support line. This is not a strong support line. Neither is this. So I see more downside here. Look at stochastics. They topped in negative territory twice. This is a stock that's very, very weak. I would not be looking at this as a long for sure.
Okay. How about UAN?
Now, this one looks very interesting. It's kind of flag-like, right, Dad? I don't know. We had a rounded top, but we're coming out of it to the upside. PMO bottom above the signal line. RSI positive. Stochastics now back above 80. The group kind of cooling, moving mostly sideways relative strength-wise over the last week and a half. But over the past month and a half, it does show some relative strength versus the S&P. And we can see that UAN is starting to show some relative strength against the group. So we're getting a little bit of relative strength against the S&P. Let's see. So we have rising bottoms here on the OBV and some declining bottoms. So that's a positive divergence. As I said, bottom above the signal line. I like the flag formation here. I mean, I think this is certainly a better looking chart than a lot of the ones we have looked at. I hate to be a broken record with my caveats that we aren't expanding exposure here, but I have to say this one does show potential. So let's look at the 5-minute. All right. So you'll notice this one trades very low volume. Okay. That is something to keep in mind. It's illiquid. So be careful with that. When I get to a 5-minute and I see a lot of these, not very smooth, I'll just move myself to a 15 or a 30-minute just so I can get a little bit better feel for the price action. I don't have so many 5 minutes where it just didn't trade at all. So I do see a rising trend here. I would be curious if that's actually a rising wedge, in which case it would have broken out of it. But we're talking about a 15-minute chart. What we're looking for is a PMO crossover, positive RSI. That happened pretty much on Friday's close. And you can see we are moving up from there. So we are at the buy point. The optimum buy point, of course, arrived earlier today. But this is looking good for a continuation into the day for upside on this one. But be careful, that is a very low volume stock. I generally stay away from those.
Okay. How about PEP?
Pepsi. I've been looking at the soft drinks. This was an area that was interesting me just because we were seeing some breakouts on Coke as well. As with the market in general, we're starting to see this topping out. Now, this is in a stronger sector based on that sector review we did earlier, but that's still some weakness. Looks like a bearish engulfing candlestick right now, coming after a bullish hot topping. RSI is still positive. Stochastics topping, but above 80. As the soft drink industry group is doing pretty well. I'm still not a fan of this one. I mean, I would, at this point with the market turning over, I feel like we need more information. And with something like this, I would need more information to join in. With the PMO looking kind of toppy, I would want to see this support level hold and maybe a little bounce off of that or some consolidation, just something that shows me that some strength outside of, that earlier breakout. I want it to hold.
You
And it's
got a
looking a little
rising wedge
suspect.
there, rising wedge.
Yes, also rising wedge, which suggests a decline breakdown. Let's go ahead. I'm going to notate it really quick. I don't know if we have any newbies here, but it might be useful.
Starting on the July bottom.
So it was in a rising trend, but now it is curved in, managed to fit into a rising wedge, bearish. That would mean an expectation of a breakdown right here. Notice the 20-day EMA is right there as well. And support is almost right there as well. That's why we really want to see that level hold. If it doesn't, this stock is too weak and I wouldn't want to be in it. If I owned it, I would be holding it and waiting to see what it's going to do here, because it certainly could bounce. It's a defensive stock.
Okay, BJ.
All right, consumer discretionary. Be really careful in this group, sector, I should say. It's right now pulling back to this level of support. That looks like the highest high it booked was right about here where it closed. So it still has some support here. You've got the gap though. I would be very careful. This could end up into a reverse island situation. But, you know, PMO went on a buy signal. I think I would feel about this about the same as I do with Pepsi. I mean, there's some good stuff going on the chart, but we really want to see this support level hold. And again, if I owned this, I would be watching this level, this gap support very closely. And if we get down to that 20 and there's a failure, wouldn't want to be there. I don't know that I would want to enter this just yet. The market's kind of acting a little fishy.
Which of the sectors was it discretionary or staples that was down big time today?
Well, let's look at our candle glance. Whoops, not our summary. Yeah, consumer discretionary just lost the 20-day and the 200-day EMAs.
In case people don't know what the difference, staples would be toothpaste items, and discretionary would be automobiles.
Right, exactly. Going out to eat, that sort of thing.
Right.
We always joked about, staples being toothpaste and Tampax. So those things you're going to kind of always need. Let's move on to the next request.
GO.
GO. Let's go. All right, grocery outlet. We're back into consumer staples. First thing that caught my eye is the RSI is in negative territory. That shows you there's internal weakness. PMO is falling. Let's add the thumbnail on here just to make it easy. It's kind of decelerating. Stochastics are moving up, but not like we're seeing, back here, a nice thrust upward. They're kind of meandering their way upward, which is, the group is doing all right. It's kind of in line with its group. So you can see it is outperforming, which is a good thing. But this just looks so toppy to me. This is the important support level right here. And it did bounce off of it before it had to actually touch it. So that's good. I would need a breakout above the 20. I mean, if I were going long on this, I would hesitate to be looking at any entries right now. And I think some of the charts we looked at earlier looked a little bit more healthy than this one, but I'd need that breakout above the 20. I would really like to see some internal strength with that RSI moving into positive territory. Right now, this just looks kind of wishy-washy to me. I can't get too excited about it.
Okay, let's try King.
Oh, King Resources. I'm not seeing.
The price action is KING.
Yeah, it's not coming up. Neil, if you could throw that symbol in again, we'll try and cover that.
Okay, SBLK.
All right. Marine transportation. This area, this group is starting to show a little bit of relative strength over the past couple of weeks. Still, this one, you've got a PMO sell signal today. It's about to hold, hopefully, the 200, but this is a classic double top, in my opinion. RSI negative, stochastics not even turning up yet. And this, the group, like I said, is starting to show a little bit of relative strength. But what's happening to SBLK? It is underperforming the group. So what's happening? It's performing in line with the S&P. And let's face it, at least for us, we're very bearish right now. You'd want to be performing better than the S&P right now at a minimum. So I'm not liking this. I mean, if we're talking shorts, if it breaks down below this confirmation line, we could expect a move to the downside about to right in here. So probably close to this area of support, which is about a 12% decline if this particular double top does come to pass. So again, this might be something more on the short side than anything else.
Okay, here's a Canadian stock, SW.TO.
All right. Okay, Eric. Really interesting price chart. We have these big gap ups and now it's kind of consolidating.
Okay, wait. That looks like a chart of stock that's is getting a buyout. I mean, I could be totally wrong, but that's typical of what you see. So that I would say, if that's the case, sell now because if it's going to get bought out, I mean, that would be something somebody else could check. But that's what you should look at in terms of the stock, because I think it's very likely it's somebody's trying to some other company's trying to buy it.
Yeah, manipulate it a little bit.
Yeah.
You could certainly consider like a tight stop right here at the low here, which is about a 3.2% stop. There's gap support here, but that would mean a stop level of.
Okay, we got a text
7%.
in the chat here says it is a buyout. So
okay.
I don't know exactly how to handle those, but I think that shows you what the buyout offer is. So it can only get worse at this point.
So quick question we'll answer before we close. Looks like we didn't get quite to all of our symbol requests, but really close. There was a question. Friday's reading on the climax analysis was a downside exhaustion climax. No, it was a downside initiation. I'm sorry. I mean, they wrote it as exhaustion, but I know that it was an initiation.
No.
But,
what you're talking about Fridays?
Yes, Fridays.
Fridays was an exhaustion.
It was an exhaustion.
It was an exhaustion climax, and it doesn't mean that the decline is done, but you can look for some consolidation, and the decline could be done. So.
Because the question is, if we are seeing further downside today, should we expect this to continue?
Yes.
Yeah, I was thinking the same thing. So yes, when we get climaxes, it kind of gives you an idea of what's going to happen next day or two. Is kind of how I look at it. It's not really a longer term signal. Sometimes they can turn into that, but we need to close it down, Dad. I'm going to stop the share and thank everybody for joining us.
Thank you for the birthday greetings.
Yes, lots of birthday messages for Carl. Appreciate those. If you would like to join us live in the room, you will see a link at the bottom of the YouTube video. Otherwise, go to our website homepage and you'll see the ad for this trading room. Click on it. You can come and join us live, ask your questions, and have some fun with that. With that, I'm going to close it out and wish you good luck and good trading.